Oh, here we go. Welcome, welcome. Good to see you all tonight. Welcome to Oregon Cash Flow Pro. My name is James Barber, and I'm here to help you maximize your cash flow. You'll notice things look a little bit differently tonight. Um, I don't have a background behind me because I'm not at home. I had to leave. We got evacuated, or we had to evacuate due to the fires going on here in Oregon this week. So we evacuated yesterday when it was in a level 2 warning, and it got upgraded to a level 3 warning today where our house is. So far no fires close to our house, at least not really close to our house. But the threat is still there. We just went into town. Not in the trailer, nope, I'm at the in-laws' house. Luckily they've got some Wi-Fi. I don't know how fast it's going to be, if it's going to be able to keep up with a live stream, but we're going to give it a shot. It seemed to work earlier today, so let me know if you guys got any issues hearing me. But we do have a couple of questions tonight from somebody other than poker, which was awesome. Good to see somebody else leaving a live voicemail. And of course, if you've got any questions, put them in the comment section or in the chat, in the live chat, and we will answer those. And we're gonna shoot for an hour tonight, and then near the end of that, we will give away prizes. So Costco, thanks for that. Nastrand, do you wish you were in the trailer, or do you have good in-laws? Oh, we've got awesome in-laws actually. I'm really happy. My wife's family is amazing. Audio is good. All right, all right. To catch you guys up, I think I started to catch you up, but basically, we had to move all of our stuff yesterday. I'm a bit discombobulated. I don't have a green screen set up here, and we're just gonna keep going and keep moving forward best we can. Um, so any questions? Put them in the comments section. Let me do one thing. I need to get connected to my Streamlabs. Let me make sure that's going. Give me just 1 second here, guys. Does not always work on its own like it should be. Here we go. Oh, it is working. There we go. That one did it all by itself. Good. Okay, maybe it'll work. It didn't work this morning. I had to do it manually. So, Streamlabs is working. Audio is working. We're ready to go. How old am I? I am 42. Almost 43. I'll be 43 in October. So, let's move on to our first question. Top Gun is in the house, and he is on the board with our first question as well. Let's see. I'm not getting any audio yet. Hey, Kat, good to see you too. Uh-oh. Why is the audio not working again? This happened last week. I just tested it a few minutes ago, and it worked just fine. Let's see. Viewer question 1. Does not want to work. Okay, let me see what's going on here. This is so funny because I was just listening to it. Let's see. Let me try and reopen this, see if it works. We are not getting any audio from this. This is weird. From either of the two questions I had prepared. Let me see. Okay, none of those are working. Let me find out what's going on. Oh, I think I know why. Let me try this.
James, this is Top Gun
Go ahead.
Bobby, longtime listener, first time caller. Just wanted to ask about the risks of the 90-10 policy with dividend calls in low interest rate environments. Thanks for your answer.
All right, Top Gun with the first question. I figured out what was going on. Okay, so what? Let's talk about dividend calls, and let me play that one more time, so I get it
Hello,
all.
James. This is Top Gun Bobby, longtime listener, first time caller. Just wanted to ask about the risks of the 90-10 policy with dividend calls in low interest rate environments. Thanks for your answer.
Okay, so the risks of the 90-10 policy design. This should show you guys that I don't prepare these ahead of time. I don't prepare my answers. This is all off the top of my head, because I didn't even remember what his question was after the first time because I got distracted. Okay, so the risks of the 90-10 policy and dividend calls. A 90-10 policy, when he asks about that, that means 10% goes to base premium, 90% goes to paid up additions, also known as cash value. What we see in the first year with a 90-10 policy design is we can see up to 90% cash value in year one. That is typically considered the optimal design. Depends on which insurance carrier you're going with. An insurance carrier like Mass Mutual and Guardian, we can get you that 90-10 design. One of the Mass Mutual products, which is a little bit differently, little lower cash value long term, but we can start it off with a little higher cash value in year one, up to 95% I've seen. So that one's a good opportunity as well. But a company like Penn Mutual, 80-20 will be the best design that we can do. Now, the way we get that design is by blending term insurance with permanent whole life insurance. Term insurance is cheaper. It's a cheaper way, it's a lower cost way for us to get a higher death benefit, which allows you to stuff more money into the policy quicker. And that gets your cash value and your break even all sooner than it otherwise would be. A regular whole life design that doesn't have any term blend might take you 10 or 15 or 20 years to break even. Whereas with a nice blend of term insurance, as much as we can get that break-even period to 3 or 4 or 5 years or 6 years. Depends on the company, depends on the health rating, of course. So that's a really nice design, but are there risks associated with that? There are a couple of risks that are technically there, but they're very minor and generally not something we consider much. One of those is term insurance. We're using an annual term insurance to blend with it, which means potentially the cost of this term insurance can change year to year as the cost of insurance changes in the overall environment. Now, one of the nice things and risk aversions that whole life provides you is a set death benefit. When you purchase that policy, you know what the cost of that insurance is going to be. I didn't mean a set benefit. I meant a set cost of insurance. You know what that cost of insurance is going to be from day one in order to meet that death benefit that you're purchasing. When you do term insurance into the mix, term insurance does not have those same guarantees with it. So, if you get term insurance that's designed to be around in 20 or 30 or 40 years, depends on how long you're planning on having this policy, you do run a risk of seeing those costs change. So an example of when that might possibly happen is, let's say there's a major pandemic and a lot of people start dying prematurely. Not like we have right now. It's not an unheard of amount that totally screws up all the actuarials of the insurance companies, but I'm talking a bad one that does screw up all the actuarials. So the insurance companies will have to revisit all the costs of their insurance and redo those in order to accommodate the new mortality rates that they actually see happening. So if that were to happen, you could see the costs change on term insurance policies, but you wouldn't see those costs change on the whole life because you're already locked into a contract. Now, why don't we worry about that too much with the policies that we design? Couple of reasons. One, with a company like Guardian, we design the term insurance to get replaced with permanent paid up additions, which is whole life insurance. And that happens as quickly as 7 years. The longest it can take is 15 years. Well, 15 to 20 years. I have seen a couple that stretch out past 15. But that's generally the longest I've seen my ability to be able to extend that term insurance before extra cash that you pay into it totally burns it off. Now, that's with an optimal design. If you actually fund it lower than max funding, that term insurance can stick around longer. But if something happens, cost of the term insurance changes, we can always reduce the cost of insurance. We can always reduce that term insurance that's blended into it. It doesn't have to be there unless you're max funding this policy and you need it to be there. So if you are max funding it, it's not going to stick around for all that long. The other things to consider is, so other companies, Mass Mutual, we can get it to extend out longer. That one we can have that blend extend out 30 or 40 or even 60 years. Just know we can adjust these down the road. So as long as you're funding the policy, it might make it a challenge to adjust it and take it off completely, but we can plan ahead. So the term insurance is not going to get jacked up so high that it's going to destroy your policy. It may go up a little bit or a little bit more year to year in a way that makes it less attractive. And we can see that happening. We can prepare for it. So we can make adjustments to the policy while it's in force. So definitely things to consider and not something to really have to worry about having that blend with the term insurance. Now, another risk could be if the dividend option or if the dividend rate changes. So this leads to his second part of his question where he asked about a dividend call. I'm assuming he means where the dividend changes, and it changes in such a manner that it's going to affect whether your policy might become a modified endowment contract. Now this is possible if the if the dividend rate gets reduced, the amount of paid up additions that you're paying into the policy will be, well, the amount of paid up additions that the dividend that was projected is buying will be less. And some companies like Penn Mutual will not allow you to add in extra money to make up for that. So if we're running a really tight ship, if we have a really strong design that has you contributing right up to the MEC limit and the dividend rate lowers in future years, it's possible that they're going to say, okay, you're not quite in the range where you need to be to avoid this becoming a modified endowment contract. Well, what's going to happen in that case? Well, what's going to happen is the insurance company is going to say, here, you need to take some of your money back. You put too much money in, your policy will become a modified endowment contract if it stays in. And so you'll have the opportunity to fix that. These things don't just happen. It won't just become a modified endowment contract because the dividend rate changed. You will get the opportunity to fix it. That's how these things work. So really the concern about it is overblown in my opinion, and the people that bring this up as something to worry about and as a reason to design it differently with less of a blend, I think it's totally unfounded. I mean, they're asking you to sign up for a policy that has a lot less cash value in year one, like a 60-40 or 70-30 design. That pays them a lot larger commission in year one, and you're doing it on the off chance that dividend rates will change in the future and you're going to ignore the company's request to actually pull out some of that money. Now, what happens if you do pull out some of that money? You have a little lower cash value, kind of like maybe closer to what you would have had you gone with their original design at 70-30 or 60-40. So in my opinion, you're better off start off with the 90-10 design or as close to it as you can, because it minimizes the insurance expense in the policy. We know that that happens because the commission to the agents is reduced. Now, the commission being reduced to the agent as low as we can possibly get it only translates into better cash value for you from day one. And the other concern that they point to is insurance companies figure dividend payments a little bit differently when it comes to the different blends. And a 70-30 blend might get a higher dividend payment than a 90-10 blend. But even though you see a higher dividend payment on those illustrations, when you actually look at the cash value, it's still higher in the 90-10 design. You got to check out my buddy Steve Parisi's video. He shows you in detail on the spreadsheets the comparisons of those. So a 90-10, I could do the same thing, but there's not really a reason for me to copy his videos if it's explained really well, and he does a great job of that. So check out Steve Parisi's IBC Global videos on the 90-10 design compared to some of the other designs. They're really great, really great. All right, let's see what you guys are saying here. Are all the life insurance covering pandemics? Probably not all of them. I would think most of them. It's going to depend on the contracts. So anytime you buy life insurance, you're going to sign up with a particular contract. Some of them will have some exclusions, others won't. Typically, where you'll see the exclusions are going to be in your term policies. Those are cheaper policies, and the reason they're cheaper is because they're not necessarily going to cover you when you pass away. It's going to depend on the circumstances and if it meets the terms of the contract. Christopher is in the house. All right, welcome. Good to see you. Wazy, keep up the great work with the live streams. Hope you're available to stream in the morning again. I do plan to be there in the morning. So I've been doing live streams in the morning, watching the stock markets and Tesla. So any of you who are interested in seeing that, we get started bright and early. In fact, the first live stream I did today was just over 12 hours ago when it started. So it's been a long day. We'll see if my voice can keep up this schedule, but we'll do it as long as we can because it seems to be popular. I'm providing at least some value to folks, and it gives me another opportunity to reach more people who are likely in need of some financial education. So I'm having fun with those. I do plan to continue them. Top Gun says, thanks for the answer. You're welcome. Hopefully that was comprehensive enough. With that said, let's move on to question number 2.
Hey, James. This is Top Gun Bobby, longtime listener, second-time caller. My second question is this. What has been your best use of your infinite banking policy, or maybe someone else's best use of their infinite banking policy? What's provided the best return or best long-term cash flow? Thanks for your answer.
All right. What was the best use of my policy, or what's the best use I've heard of? That's a pretty heavy question. I mean, asking for the best. I don't know if I can define the best, or even decide which one was the best. I've used it for a number of different things that I consider to be well used. So, for me personally, I've used it for all kinds of stuff too. So, I've used it for purchasing other policies. I've used it to, I've used the premiums for some of the policies that I've owned, and I've used that to start new policies. That's been a great use for me because I am trying to get 100% of my income flowing through not just my whole life policies, but also my IULs that I have. So I have a number of different policies now. Just got 2 more delivered today. So my two daughters, I just started two more, one on each of them. So that's another increase. And I use these policies right now. So the best use for me right now is as a line of credit. Typically, I like to have a line of credit, a home equity line of credit, and I'd like to use that for offsetting my interest charges. I like to use it for dynamic banking, but I recently refinanced my house, and so I paid off that line of credit. I haven't got a new one yet. I need to get in and apply for that. But now that my house is under a fire danger, probably not the best time to go apply for that. I was really hoping to do that this week. So I expect soon I'll get another HELOC. But in the meantime, I'm using my life insurance policies as a line of credit, knowing that when I borrow from them, I can pay that loan back, and that money's going to be available to me again to use, just like a line of credit. And so I've been using it that way. I would say that's probably the best use of my policies, is as a line of credit doing dynamic banking. Now, ideally, we use a line of credit to do dynamic banking because we can move the money back and forth quicker. But I've been using my Guardian policy, and it's taken, the last couple of times I've moved money, it's been about 2 days to get the money out and 1 day to get the money in, which is pretty solid. The reason I say a line of credit is ideal for me is because I can move money in and out of it in seconds. I don't have to wait days. So it allows me to offset my interest a lot quicker, and I don't have that delay I don't have that 1 or 2 day delay in getting the money moved, which, I'm all about maximizing the cash flow. And 3 days that I can't have money offsetting interest, that's inefficient for me. It's not as efficient as I would like to be. So I'm definitely looking to get that line of credit back. But I would say that is the best use of my policy. Now, what have I heard people use it for? Real estate is probably the number one thing that I see people use it for. One of the policies that I'm working on setting up now, we went with the less efficient Mass Mutual policy design because it offered the ability of access to up to 95% of the cash value in year one. Now, this is a real estate investor where, to them, access to the cash is the number one issue. They can't go with an 80-20 design. They can't go with a 90-10 design. I mean, they could, but potentially it could cost them a deal. It could cost them a real estate deal. Now, on a real estate deal that might be worth a 30% return in 1 year, or a 60% return, or a 100% return, there's all kinds of different deals that you can stumble into when you're a real estate investor that can earn much, much greater returns than you'll ever see inside of a policy. Remember, we're using these policies not as investment vehicles themselves, but as savings assets, so that we have the money available to use for outside investments when it's needed. And meanwhile, when we're holding on to it, we're still getting a decent return. That's what these vehicles are used for. And in this case, having access to that cash value allows you to take advantage of those outside investment opportunities. So I'd say real estate investors really can take advantage of these things. Yeah. Let's see. Okay, I sound fine though. That's good. Where are we at? Christopher, did you see Tesla competitor Lucid version of Battery Day today? I was watching that right up until I started this live stream. So I didn't get a chance to finish it, and I was only halfway paying attention to it because I was trying to get this thing ironed out. So I'll finish taking a look at that. It's a cool looking car, and I like the specs on it, so I'll definitely be interested in seeing what what they have to offer. Let's put it that way. Costco, how can we use the cash deposited for buying stocks? Good question. I've done that. Basically, when you put money into your policy, it's available to pull out again. It's available to borrow against. So you're using the cash value in your policy as collateral. When you do that, you get to pull the money out, essentially pull the money out. You're borrowing against it. It's going to stay in the policy, continuing to grow How much it grows is going to depend on which company you're with. But then you can use that money for whatever you want. So you'll be able to just deposit that right into your brokerage account. I did that last month when I saw the opportunity to buy some Tesla stock before the split. And I went all in. It's when I started doing the Tesla live streams, and our channel subscriber count just skyrocketed because of that. A lot of people were interested in following along on that journey that we're taking together as I partake in a little bit of day trading. So that's one thing you can do. That's how you can use the money within your policy for stocks. In fact, if you go through my videos, I talk all about different ways that you can use money within your policy, or different ways you can use expenses that you might otherwise use and divert them through your policies. So let's say you had $10,000 that you were wanting to invest in the stock market. Well, what's the best way to get that money into the stock market? One could be to just give it to your broker, put it in the stock market, and then do with it what you will. I would argue that a better way to go about utilizing that money would be to funnel it through an infinite banking policy first, which gives you an increased amount of death benefit. It starts compounding those dollars for the rest of your life. And then you can borrow that money out, put it into the stock market. The reason that I felt comfortable doing that, playing around with doing some day trading, was because I have some solid policies that I've already set up. And I know that I've got death benefits in place for my kids. If something were to happen to me tomorrow, if I had put $50,000 into the stock market, they would have $50,000 worth of stock, as a result of my passing away, right? That's what they would inherit. In this situation, because I went through my life insurance policy first, they're going to have $2 million if something happens to me. They don't have to wait and see, how do I do it day trading? They don't need to wait and take advantage. They don't need to wait to take advantage of me going through the ups and downs of the stock market to know that, at some point down the road, when I pass away, eventually in my life, I'm going to have a couple $1 million to pass on to my kids. I locked that in day one by starting my infinite banking policy. And I'm using that policy. So it's not just an expense here. I have a specially designed to maximize my cash value so I can take that money out and I can use it when needed. And when I don't need that money, I park it right back in there. And it continues growing and providing all of the benefits along with that. So that would be my answer to that question. Hopefully that answered. Cash deposited in policies through Ameritrade. I don't know about Ameritrade in particular, but basically it doesn't really matter who your broker is. What you'll do is when you access the cash in your policies, you'll request a loan from the insurance company. They'll send it to you either by mail or deposit it directly into your checking account. And then you'll move it into your brokerage account from there. So hopefully that answers your question. All right, Poker asks, Poker in the house. What experience do you have with option B regarding IULs? What experience do I have? Option B is like the number one option death benefit of any of the IULs that I sell. As a quick refresher for folks, you have you typically have two different benefit options. Some companies offer a couple more, which I don't really delve into because they don't give us the opportunity to reduce the cost of our insurance. But we typically have option A, which is a level death benefit, and option B, which is an increasing death benefit. We usually design our policies, the IULs, with the option B, increasing death benefit. It allows us to start off with a smaller death benefit, which means reduced insurance cost. And then as our cash value in the policy grows, the death benefit increases right along with it. And so this keeps that cost of insurance at a level, at a steady point, except for it goes up each year as you get older. And then when you stop contributing to the policy, when you stop paying premiums, we change from an increasing death benefit to a level death benefit. Now, a level death benefit at some point is going to end up with a lower cost of insurance compared to your cash value than an increasing death benefit. So if you have $1 million increasing death benefit, you have $1 million year after year, and as your policy grows in cash value, your death benefit also grows by that same amount. So if you have $50,000 in cash value, you would have $1 million and $1,050 in cash value. I think I missed some numbers there. Blame it on my lack of sleep. If you have $50,000 in cash value, you would have $1,050,000 in death benefit with an increasing death benefit. Okay. Now, when you get into, let's say you get into old age, you've had the policy for 40 years. Now you have $1 million in cash value. Your death benefit is still going to be $1 million above that because it increased. So now your death benefit is going to be $2 million. Well, when you start getting 60, 70, 80 years old, that cost for $1 million of insurance is going to start to get expensive. So what we look to do is we look to reduce that cost as much as possible. That way you can maximize your cash value. And when we switch to a level death benefit, that allows us to drop from a $2 million death benefit down to possibly a $1,200,000 death benefit without the policy becoming a modified endowment contract. So we use the increasing death benefit to stuff money into it. Every year we want to make a whole bunch of extra payments into it. And as soon as we want to stop funding it, change it to a level death benefit, reduce that cost of insurance, and then move on into retirement, and you can start pulling out money for retirement using it like a pension. So that's how that works. Costco asks, what percent loan can we get? So that will depend on the insurance company that you end up going with. There's a number of different options out there. They range from insurance companies that offer 2% loans along with 2% offsetting, or maybe somewhere around there, maybe 3%. What they'll charge you 3% and they'll credit your policy 2%, or they'll credit your policy 2.8%. Those are typically close to what we might call wash loans. Other wash loans may look like a 6% cost to borrow, but they'll also credit your policy 6%. So we call those a wash loan. That's like what Guardian does. Then we have companies like Penn Mutual, where they'll do 6% cost to borrow, but they'll credit your policy 0.5% lower than that. So they'll credit your policy 5.5%. Then we have Mass Mutual. They'll credit you. You can do a fixed rate option where it'll be a 6% fixed loan rate, and they'll credit you 0.5% higher than whatever the dividend rate is. Currently, that's 6.2%. So they'll credit you 6.7% and only charge you 6% for that loan. That's a pretty good deal. Mass Mutual also has a variable option. They'll charge you 5% for the loan, but you'll get credited in your policy the dividend rate, currently 6.2%. So you got some opportunity for arbitrage. When we look at and we consider the loan rates that each company offers, we don't only consider the loan rates. We also consider what do they do with your funds that are being used as collateral. And ideally, we would like to see them either match it or do better, or ignore it. If they ignore it, you're going to continue to earn either what's in the index, in the case of an index universal life policy, or you'll earn whatever the dividend rate is. If they don't ignore it, they'll either give you a wash rate, which is equal to, greater than, or less than the amount that you're borrowing. Ideally, we want to be equal to or greater than, because it's a lot easier to get that arbitrage within the policy if it's available to us. Now, of course, you can always go to an outside bank and get a loan against the cash value in your policy using that as collateral. That's an opportunity as well. And we talked about this, I think, last week, but I have a list of banks who have a program in place that will use your cash value in your policy as collateral. So if you're interested in that, shoot me an email and I will share that with you. I don't have it to put up on the screen here at this point, but maybe I can do that next time. Robert, thanks for the tip, man. Appreciate it. Always appreciate you guys showing some love to the host. Let's see. Next question. Costco, $2 million with 90-10 ratio for a 42-year-old. How much do you think you would have to pay? Oh, good question. I don't usually focus on the death benefit. What I focus on is how much would you like to pay. So if you tell me about how much you would like to pay, I might be able to tell you about what it would cost, or about what you would get for a death benefit. So for me, I'm 42 years old. 90-10 ratio was, I did about $50,000 annual premium, and that got me, so a 42-year-old male, I'm assuming. You didn't even give me which gender, so let me know which gender also, but because that is definitely a factor. So 42-year-old male for $50,000 annual premium, we can set it up. I design it as a base premium with the blend, and the base premium will be right about $5,000. In my case, I did it at $4,800, and that got me I think it's 1.5 million death benefit. Now my wife, 42, she's 41, almost 42. She'll be 42 later this month. Almost 42-year-old female, a $50,000 90-10 design was almost $2 million in death benefit. So definitely makes a difference what gender you've got, and also your health rating as well. So health rating definitely makes a difference too. D-Monts, have I bought into Workhorse? No, I have not. Haven't looked into them too much either, but I know that there's a lot of people excited about that one. Costco, what do I mean by credited? Oh, so when I say credited, each year your Infinite Bank, your life insurance policy, your whole life or your IUL, gets credited with a certain amount of money. That's the growth within the policy. For a whole life, it's going to be a dividend typically. So you get a dividend rate because you become part owner of the company. So each year they're going to look at the cash value in your account, they're going to look at what your policy is, and you're going to get a certain amount of dividend credited. Well, when you borrow money from the company, that may or may not change how much you get credited compared to that dividend rate. In some cases, they recognize that you took a loan and they'll adjust what you get credited for it. In other cases, they'll ignore that you took a loan. No adjustment needed. And that adjustment could be positive or negative. It just really depends on the company. So there's a wide range. But that's what I mean by credited. And then with an index universal life policy, you're going to get credited based on whatever index you're tied to. Or if you're using a loan option that we don't recommend, which is one of those wash rates, you'll get credited based on whatever their wash rate plan is. But when we look at using IULs, we try and go with the participating index option that ignores that you have a loan. So you'll pay whatever the loan rate is, oftentimes 4.5%, maybe 5%, and you'll still get credited the full indexed amount, whatever the policy was supposed to grow based on the index it was tied to. So, okay, male. Yeah, so probably about 1.5 million death benefit for a $50,000 premium. Let's see. How much do I charge for consultation? If you want to just talk with me about life insurance, I don't charge anything for that. You just sign up on my Calendly, and that is www.calendly.com/cashflowpro. Let me put that here. I'll type it in the chat so you can see it. Give me just a moment while I pull this up. Cashflow Pro. So that's my link. You can sign up to meet with me there. There's a few different options. You'll notice that there's a 20-minute free option. That's open for everybody. I give everybody at least one free 20-minute option to meet with me. We can talk about whatever you want. If you want to talk about life insurance, you can, and we're working on your policy, you can use that same one over and over. No big deal. If you want to just talk about other things and get some consultation, maybe on cash flow, how to maximize your cash flow, how to move money more efficiently, doing dynamic banking, things like that, you can sign up do the 20-minute free one first. I always recommend everybody do that. But then I also have a 30-minute paid option. It's also in there. Costs you $30, and you're welcome to use me for as long. I'll try to provide you value with whatever you want to talk about. But really, we can talk about whatever you want. I'll let you know though if it's a topic that maybe I'm not so confident I can provide you enough value out of it that you should be paying me to talk about. But that's up to you. I leave that up to you. Let's see. What are your thoughts on Tesla? Didn't see your live session on it. I was on this morning. You'll have to check out those live streams. This live stream is dedicated to our finances, wealth care. So I'm trying to stick mostly to those questions. But I'll be back on again tomorrow morning too. So we're doing live streams every morning on Tesla and the Market Watch. So tune in tomorrow. Let's see, Costco. How much should you invest if you make $250K joint? Not quite sure what you mean by how much should you invest. Where? How much should you invest where? Are you asking about a policy? Are you asking for an infinite banking policy? Or something else? Typically, this is something that I can be a lot more specific if you meet with me using that link, and we can actually look at your overall financial picture. So I do provide financial consultation, and like I said, the 20 minutes free of charge. Inevitably, the first time I talk with people, we go well over 20 minutes. It usually ends up being about an hour because I want to try and get a good picture of your overall finances so I can actually give you some valuable advice that you can take with you. But I would definitely sign up. You get to pick, when you go to that Calendly link, you get to see my whole schedule for like the next few weeks. And you can just pick a time, whatever works best for you, and I will be there. As long as I'm not running away from fires at the time. So I did have to reschedule yesterday a couple of my meetings because of that. But I did make all my meetings today on time. And one of the ones that was yesterday, we rescheduled it for today. The other one yesterday, we just rescheduled it for later in the day. So I definitely will do my best to try and meet you at your preferred scheduled time. Christopher, what are your different expertises you have besides your superb Tesla stock trading? Oh boy, I don't know if I would describe that as superb, but it can be entertaining, that's for sure. So I have my realtor's license. I've been a licensed realtor here in Oregon for the last 6 years or so. I'm currently a broker here. I have my broker's license, but I focus on life insurance. So specifically high cash value, specially designed policies, whether it's index universal life or whole life. Those are the two things I really specialize in. And designing those, making those policies maximum cash value for you guys, that I would say is my area of expertise as it pertains to life insurance. I can really sell any kind of life insurance, but those are what I tend to focus on. That's what the channel focuses on. And it's really the best use. I mean, when we tackle policies like that, when we design them that way, it really covers all of your life insurance needs that you could possibly want. So most of the time, people don't really need to get separate term insurance. There's no reason to have something with an expense like that. When we do a whole life policy design or an IUL design, and we start to put a lot of our money, a lot of our income through there, and we get all the benefits that go along with that, even when I'm trying to minimize the cost of insurance, we still get a massive death benefit. So I currently have over $2 million in life insurance, death benefit, and I'm just getting started here. So my wife, I've got a couple million on her. I've got policies on my kids. It gets them death benefits. So really, the whole family, everybody that can get covered is covered by life insurance, and I've still got a ways to go. I mean, I anticipate those going up as my income continues to expand. So I don't even currently have all of my current income level covered, but we're working on it. So other than that, cash flow, maximizing your cash flow. I can help out individuals. I can help out businesses. What we want to do is help you avoid idle money. So that's the other place I would say I have an expertise. I was also a general contractor and a business owner. I owned a pressure washing and window cleaning business for 13 years. So I have a lot of expertise in that regard too. I framed some houses. I've sided a whole bunch of houses. Built a couple of houses. I've done some remodeling. I've pressure washed everything you can think of. I've cleaned all kinds of windows from ground floor all the way up to 4 stories, possibly even 5 stories, I guess, on one of them. I've done vehicle washing along with that same business for that number of years. We washed RVs, trucks, semis. I've rebuilt decks. I've remodeled decks. I've stained decks, stripped them and stained them. I've done all kinds of stuff. So I have a wide range of experience in a lot of different things. So, and I kind of bring that all to you guys with these live streams. So you can see, I went to school. When I went to school for accounting and business management. So mostly that was because I knew I was going to start my own business and I wanted to be able to do my own taxes. So that's kind of my background. That's why I'm so detail oriented and I like to provide details to you guys, because when I'm out shopping for things like this, or when I'm trying to figure out the best use of things, we got to know the details. And oftentimes other people out there, they leave important details out. I don't like to leave it out. I like to be fully transparent, because I think the more knowledge that I can impart on you guys, it allows you to make better financial decisions, and inevitably we'll end up working together because of that, I think. Top Gun, James has been super helpful with consultation. Get on board with IBC. IBC is the infinite banking concept, and consider his advice and tips. Thanks, Top Gun. Appreciate the shout out. Anybody, I know I've worked with a number of you folks on here. If anybody has some positive words you want to say about that, you might look me up on Google and leave me a nice Google review. I don't have very many of those yet, and it's mostly because I don't ever ask for it either. But it is, I got to remember to do that because it's kind of important. It helps boost our rankings, helps get the word out to more people, and of course, the more people that I'm talking to, the more people that come and work with me, the easier it is for me to be able to provide everything that I provide to you guys. So, Christopher, definitely agree with you on the entertaining part. Okay, that's good. Good. Yeah, the expertise part, boy, I don't know. I'm down quite a bit of money on Tesla right now because I didn't get out when I should have. For some reason, it seems like life just gets in the way sometimes of me getting in and out in the time frames that I would like to get in and out of that stock. So, and not only that, but I also distract myself. I would probably have done a lot better if I wasn't doing the live streaming at the same time. If I could just focus on doing the stock trading, but it would be a lot easier for me to focus on that and make some money doing day trading. But I'll tell you what, I have so much more fun. I don't even care. I don't even care that I've ended up making some bad moves. Never buy the dip. That's what it looks like, right? When I mean, there's a few times I bought the dip. Looks pretty good. But I would say if you're watching me real closely, you can see I miss the dip quite a bit. I am the dip. Too funny. All right, so we're getting to the end of our hour. If there's any more questions, put them up in the chat. Otherwise, I'm going to go to the giveaway portion of this. And I'm going to, as usual, I will give away anything from our Teespring store or one of the 2 books that I advertise on every video that I do. There's 2 books that I think everybody should read it really helps you understand the value of utilizing whole life policies and or index universal life policies. They're in the description of each video. One of those is called Becoming Your Own Banker, and excellent book. Will totally change your mind on moving money and how to flow money through your hands a lot more efficiently and turn it into a lifetime of compounding. The other one is called The Retirement Miracle. That one has more to do with index universal life. Now, you can use index universal life policies very similarly to how we use whole life policies. They just have different risks associated with them. So something to keep in mind, I like both of them. I own both of them. They have different risks, and they serve a different purpose when it comes to their place in our financial pyramid. So something to keep in mind, but if you haven't read those books, get the books if you're one of these winners. If you're not one of the winners, you can use those links and order the books, and I would highly recommend it. But if you've read the books, go for one of the things in our Teespring store. The link should be in the description of this video. But if you're a winner, if you're one of our winners tonight, just send me an email and I'll get you the links to all those things. So, how we do this? Pick a number between 1 and 10. We see a couple people already started. We've got a number 7 and a number 2. Pick a number between 1 and 10. I'm going to use a random number generator. So let me get that set up on my end. While I get that set up on my end, you guys pick your numbers. And I'll make it so I can do it right on the screen that we're looking at. Okay, I'm seeing some numbers in there. We got a few more viewers on there, but no numbers written in here. So make sure to pick your numbers. And the way that it'll work, if you pick the same number as somebody else, if that number comes up, then I'm going to do another random number generator between however many people tied. So if there's 2 of you that pick that, I'm going to do a random number generator between 1 and 2, and it's going to pick whichever one of you is the winner. First one who listed the number would be number 1. Second one would be number 2 in that case. Just so you know, your odds are better if you pick a different number than somebody else. So we do have... okay, paparazzi changed it. We do have a couple of them that had matched up, but you're welcome to change it if you get in before. Okay, don't both of you change it. Too funny. Guys are on the same wavelength, it seems. Okay, sounds good. All right, so we got a couple of number 7s. Hit command, someone else already had a 7 up there. I don't know if you want to pick a different number. But we'll go 30 more seconds. Give you guys a chance to lock in your numbers. And then we will do this. Then we'll do this random number generator. I haven't clicked it yet. This is where it's starting out at. Okay, TL. Changing to 8. Hit command 1. Okay, that's good. Costco. How about Costco? We'll leave you at 3. Poker, we'll give you number 2. Because Christopher already picked number 5. Everybody okay with that? If you're not okay with that, send your complaints to the management. Here we go. We're going to do our random number generator starting right now. Number 1. Number 1 is our winner. Hickaman. Hickaman is our winner. Good job. I don't think you've won before. You don't even know what's happening. So you just won our drawing. So you win either. Let me type this into the chat here. So you'll win a book from the show description. If you go into the details on this video, you'll see the 2 book options, or from our Teespring store, and that store is also, the link should be in the description. Our Teespring marketplace. You're welcome. Congrats on that. It's good to see new winners. Totally random, so we end up with a lot of the same winners sometimes, so it's pretty interesting. So we will go with that. Look at that, we're right at an hour. So if you guys have any other questions, I'll give you a few seconds. You can ask me the questions. My voice kind of needs a little bit of a rest though, so I'm glad to be going off here after an hour. I think we got some good questions today, provided some value. And Hickaman, you can also send me an email. My email is james@OregonCashflowPro.com. Shoot me an email. Let me know that you're Hickaman and you want to claim your prize. How it works is you will go to one of those links, either the Teespring store or one of the books. Go to those links, pick whichever one you want, order it, pay for it, and then send me the receipt via my email, and I'll reimburse you right away. So I've had Top Gun Bobby. He won a nice hoodie that he really likes. In fact, he won 2 of them, and those were worth almost $50, including the shipping. So I'll reimburse you for the shipping as well. So, what's the book about? There's 2 books. One book, Becoming Your Own Banker, is about whole life insurance, how to better utilize it for understanding financials and to start money compounding. Start all of your money compounding for the rest of your life. The other book is IULs and Index Universal Life, and why those are really good products to get into. So a couple of really good things. I highly recommend the books. Highly recommend the books. Oliver, you got your wish above 360. I saw that. That's crazy. I don't know why it jumped way back up, but we'll see what happens tomorrow. I'm definitely interested in seeing what happens tomorrow. I'll have energy in the morning. No worries. Good night's rest will do me some good. All right. So with that, Hickaman, make sure you reach out to me by email. You can go to my website as well, OregonCashflowPro.com. Connect with me that way if you didn't catch my email. Otherwise, if I don't hear from you, I will try and remind you on our next live stream. Well, next Wednesday. So join us again next Wednesday, guys and gals, and we'll dive back in, get some new questions. If you have any questions, you want to leave a voicemail for me that I can play, just like I did Top Guns today, go to my website. There's a link in the top post, and you can record it right there. You don't need any special tools. You just push the button, start recording, and we'll get it answered on there. So, future's looking lower. Should it be a worry? I have no idea. We'll have to address that tomorrow in a chat where we've got all our experts. I still don't qualify as an expert when it comes to that stuff, but we'll be having fun either way. See you guys. You're welcome. You're welcome. See you guys later. We're gonna mark this one done for tonight. Have a good night, everybody.